Israel's economy stands at a crossroads, renowned for its tech sector, yet shadowed by conflict. The ongoing wars with Iran and Hezbollah are not just military issues, they directly impact government spending, foreign investment, and daily life. Economic forecasts now hinge on the duration of these conflicts, with billions at stake. The recent state budget approval brought some political stability, but the economic outlook remains uncertain. As of April 2026, policymakers face a fluid situation, with projections shifting as events unfold. This video explores Israel's economic scenarios for 2026, examining how growth projections change with the length of conflict. We'll also look at how these numbers have been revised, what happened in 2025, and what the government hopes for in 2027. The difference between a few months of war can mean lost jobs, reduced services, and shaken stability. Understanding Israel's economy means understanding a nation navigating multiple fronts. The stakes are high, and the path forward is anything but clear. Let's break down the numbers and the realities behind them. Israel's finance ministry has outlined two main economic scenarios for 2026, each tied to the timeline of conflict. The optimistic scenario, a quick end to fighting with Iran and Hezbollah this April, leading to projected growth of 3.8%. The pessimistic scenario, conflict with Hezbollah drags into June, dropping growth to 3.3%. That 0.5% gap represents billions in lost activity, jobs, investments, and consumer spending. Prolonged war means more reservists away from work, labor shortages, and cautious consumers. Northern businesses, especially tourism and retail, are hit hardest. More defense spending means less for education, healthcare, and infrastructure. These forecasts highlight how Israel's economic fate is tied to security. For families and businesses, this uncertainty makes planning nearly impossible. The sooner stability returns, the faster the economy can recover. The government's challenge end the conflict swiftly to restore growth. Israel's 2026 economic forecasts have shifted dramatically as conflict escalated. After the Gaza ceasefire in late 2025, optimism was high. Growth was projected at 5.2%, but as the air war with Iran began in March, the forecast dropped to 4.8%. Continued fighting with Iran and Hezbollah forced another revision. Now growth is expected between 3.3% and 3.8%. Each new military development triggers immediate economic recalculations. The journey from 5.2% to 3.3% growth is a stark reminder of war's economic cost. These numbers aren't just statistics, they represent lost opportunities and delayed investments. Israel's economic potential is directly linked to its ability to achieve security. The finance ministry's shifting forecasts tell a story of resilience under pressure. Every revision reflects the real-time impact of conflict on jobs, spending, and national stability. The lesson: economic recovery depends on peace. The longer the conflict, the greater the economic burden. Stability is the key to unlocking growth. To understand 2026, we must look back at 2025, a year marked by the Gaza war's economic toll. Growth slowed to just 2.9%, far below pre-war expectations. Reservist call-ups drained the workforce, especially in construction and tech. Consumer spending and tourism collapsed, stalling the economy. The government redirected massive funds to defense, straining the budget and increasing debt. These scars set a lower starting point for 2026's recovery. Hopes for a rebound now hinge on ending new conflicts quickly. The experience of 2025 is a warning. Conflict can swiftly derail growth. Every month of war means deeper deficits and delayed progress. The economic wounds of 2025 are still fresh, shaping every decision in 2026. The lesson is clear. Peace is essential for recovery. The stakes for Israel's financial well-being have never been higher. In March 2026, Israel's parliament approved a massive wartime budget, 699 billion shekels, with a heavy focus on defense. This budget was crucial for political stability. Failure would have triggered elections and chaos amid conflict. Defense spending dominates, forcing cuts elsewhere. Schools, hospitals, and social programs feel the squeeze. The budget's passage avoided a leadership vacuum, allowing the government to focus on security and the economy. But the trade-offs are stark. More for the military means less for civilian needs. This is a wartime budget, designed for immediate threats, not long-term growth. The economic impact will be felt all year, as resources shift to defense. Political calm has been restored, but economic challenges remain. The government must balance security with the everyday needs of its people. The choices made now will shape Israel's future. Behind every economic forecast are real people, families, workers, and business owners living with war's disruption. Reservist call-ups leave families without income and businesses without key staff. Northern communities face evacuation, lost livelihoods, and frozen local economies. Tourism in the north has collapsed, and recovery will be slow even after fighting ends. The psychological toll, stress, anxiety, and uncertainty dampens consumer confidence nationwide. People delay big purchases and cut back on spending, rippling through the economy. The human cost of prolonged conflict is immense. More families uprooted, more businesses shuttered. Economic forecasts try to quantify this burden, but the reality is deeply personal. The push for peace is about more than GDP. It's about easing hardship for millions. Israel's legendary resilience is tested daily. The sooner stability returns, the faster communities and the economy can heal. Israel's high-tech sector, Silicon Wadi, remains a pillar of economic strength. Tech exports and high-paying jobs drive growth, even during conflict. Flexible work policies and global teams help tech firms adapt to disruptions. However, reservist call-ups, slow innovation, and prolonged instability could deter new investment. The tech sector's global reach provides some insulation, but it's not immune to war's effects. Continued resilience here is vital for offsetting broader economic damage. The industry's adaptability is a model for the rest of the economy. As Israel faces uncertainty, tech remains a beacon of hope. Its performance will be crucial for recovery in 2026 and beyond. Innovation is Israel's best asset for rebuilding after conflict. Looking ahead, Israel's finance ministry projects a strong rebound in 2027, growth between 5.3% and 6.1%. The optimistic scenario depends on a quick end to current conflicts, allowing recovery to start sooner. A delayed peace means slower rebuilding and a lower growth rate. Rapid recovery would see reservists return, businesses reopen, and investments resume. Even the lower estimate signals robust potential, but only if stability is restored. These forecasts are a powerful incentive for swift conflict resolution. The tech sector and skilled workforce remain the foundation for future prosperity. The hope, once war ends, Israel can return to high growth and renewed opportunity. The path to prosperity runs through peace. The choices made now will shape the nation's future. Israel's economic fate in 2026 matters far beyond its borders. As a global tech hub, disruptions here ripple through international markets and supply chains. The world watches Israel as a case study in economic resilience under fire. Growth projections, 3.3% to 3.8% this year, over 5% next. Tell a story. War is costly, peace is profitable. Every week of conflict means lost growth and greater hardship. The 2026 budget brought political stability, but tough trade-offs remain. The tech sector offers hope for recovery, but only if security returns. Israel's future prosperity depends on ending conflict and restoring stability. The coming months will determine not just security, but the nation's economic destiny.